Every investor knows and reveres Warren Buffett, the Oracle of Omaha, the rumpled, plain-spoken financial genius whose talents and homespun precepts have made him one of the world's wealthiest people. He avoids bubbles, whether in technology, housing, or complex financial instruments. Buffett's success, self-deprecating wit, honesty, and humble ways have made him a person we can all learn from and emulate. Of course, all this comes with footnotes. Buffett is a complex, hard-driven striver. His folksiness, populist politics, and generous philanthropy hide a hard-eyed focus on the bottom line. He can be self-absorbed and even callous, and his personal life raises eyebrows. In his investing, he has set 3 easy rules govern him: 1. Never lose his money; 2. Never forget rule number 1; and 3. Never go into debt. Yet he has repeatedly broken all those rules, and more, in a career that has included learning, and often unlearning, dozens of tough financial lessons. Emotionally abused as a child, Buffett has been physically timid all his life. He dreads confrontations. He has repeatedly avoided firing underperforming managers, only to be prodded to action when their losses inevitably mounted. His public image has waxed and waned, from expert to has-been to elder statesman, and he couldn't have cared less. When he topped Forbes magazine's list of the world's richest people, a status he no longer holds, he was still living in the Omaha house he had bought 60 years earlier. But the Buffett name has become magical. At last count, nearly 100 books are purporting to draw on his wisdom. Here, we'll follow Buffett's journey, from the years of the Great Depression to the pinnacle of his investment fame. And along the way, we'll assess his principles and precepts to see which ones can be applied by people who aren't Warren Buffett. An early focus on money. Buffett's father Howard, an Omaha grocer's son, became a stockbroker for a roaring 20s bank. After the Black Tuesday crash of October 29, 1929, Howard went 4 months without making a single sale. His wife, Layla, would go along on his calls for moral support, waiting outside the homes of potential clients until her husband emerged to be consoled yet again. Warren, their second child, was born the following August. Within a year, Howard lost his job and his savings when his employer went bankrupt. With little possibility of work and against all odds, Howard and 2 partners set up their own brokerage firm. They found customers and prospered by focusing on stocks and bonds in solid, conservative businesses. Thus, Warren's boyhood was never as bleak as that of many in the Omaha of the 1930s. Still, the hard times, dust storms, heat waves, and plagues of locusts left their mark. Warren grew up a cautious child with a steady, focused gaze. He kept his knees bent while learning to walk. And even from his preschool days, he was interested in numbers and money. When he was 7, he asked Santa to bring him a book, William Townsend's Bond Salesmanship. He read it, too. Buffett's mother impressed her neighbors as a model of duty, sacrifice, and social virtues. However, at home, she lacked warmth, complained of frequent headaches, and subjected Warren and his big sister, Doris, to tirades of rage. Buffett reacted by seeking shelter at his friends' homes and drawing emotional support from their mothers. He also retreated to numbers and books, listing the license plate of every car that passed his house, for instance, or obsessively collecting coins, stamps, and bottle caps. A born skeptic, he always sought evidence to support any theory. During sermons in church, he passed the time by calculating the lifespans of composers of hymns from the dates of their births and deaths listed in the hymnal. He hypothesized that their faith should give them an advantage over non-believers. But when it turned out that their lives were no longer than average, he began to doubt. In later life, he would call himself an agnostic. Precocious and competitive, Buffett skipped a grade in school and excelled at spelling bees and blackboard arithmetic contests. His favorite book was the World Almanac, and he memorized the population of every major city in the United States. He was 6 when he started his business career, selling packs of chewing gum for 5 cents each and earning a profit of 2 cents over what he paid his grandfather the grocer for his supplies. He peddled Coca-Cola door to door, along with copies of the Saturday Evening Post and Liberty magazine. At 10, he got a job selling peanuts and popcorn at Omaha University football games. After that, Buffett's father took him to New York, where he visited the New York Stock Exchange. He spoke briefly with the legendary investment banker Sidney Weinberg and had an epiphany when he and his father were taken to lunch in the members' dining room at the stock exchange. Their host ordered a customized cigar, picking leaves from a tray of assorted tobacco carried by a waiter, who then rolled the cigar. "I thought, this is it. It doesn't get any better than this," Buffett told his biographer Ellis Schroeder. He vowed to become a millionaire by the time he was 35. The next year, Having saved $120 from his enterprises, Buffett bought 3 shares of Citi's Service Preferred, one of the conventional stocks his father favored, for $35 a share. Doris was his partner in the deal. When the stock sank from its earlier high of $38.25 to $27 a share, she was disappointed. When it recovered to $40, Warren sold for a $5 per share profit, but when the stock soared to $202 a share, he brooded over having been too quick to sell. He promised never to make that mistake again and not invest someone else's money unless he were sure he would earn a respectable return. In later years, Warren Buffett usually managed to keep both those promises, but he sometimes had to maneuver adroitly to make investments come out on top. Capital magic. Buffett's father, a conservative Republican and no fan of President Franklin D. Roosevelt, ran for Congress in 1942 and won. The family moved to Washington, where Buffett continued his voracious reading, focusing on famous businessmen's biographies. He made money by delivering newspapers and selling used golf balls retrieved from water hazards. The weekly income from his paper route alone was $175, which was a good wage for a working man. At 13, Buffett filed his first income tax return. He claimed a $35 deduction for the use of his bike and his watch on his paper route. The next year, Buffett discovered the magic of compounded capital, an investment that churns out returns that can be reinvested over and over. He and a mechanically gifted friend bought an old pinball machine for $25. After the friend refurbished it, Buffett talked a neighborhood barber into installing it in his shop in exchange for half the proceeds. The machine paid for itself in its first week of service, and the boys soon had 6 more installed in other barbershops. From that time on, Buffett saw each dollar in his pocket as not 1 but 10, what it would become if he let it grow. That perspective permanently affected his attitude towards spending money. With few exceptions, he has been careful all his life. By the time he finished high school, Buffett's savings had equaled $5,000, more than 10 times that much in today's dollars. Opportunity, Buffett knew, is where you find it. If you don't try something, you can't succeed. Energy and initiative count as much as talent and luck. Winners win because they work hard and hold on to their money. Buffett had also developed an interest in horse racing. Early on in Nebraska, the mother of one of his friends took both boys to the local track, where Warren discovered stooping, sorting among the trash, cigarette butts, and empty beer cups on the ground for winning tickets that had been carelessly tossed. Some amateur bettors didn't realize that the apparent winner of a race had been disqualified or that there was a payoff for second and third place horses, too. The boys picked up all the torn ticket stubs they could find, and sorting through them, found some winners. They were too young to cash them in, but the friend's mother took care of that. In Washington, Buffett went on to learn about handicapping horses. Characteristically, he did it to the point of obsession. He had his father borrow hundreds of books on horse racing from the Library of Congress, and he wrote off for several months' worth of back copies of the Daily Racing Form. He would look at a long past day's races, practice handicapping the horses, and then pick up the next day's issue to see how his choices had actually done. Then he would start over with that day's races before pulling the next day's racing form from his pile. Testing his theories, he went to the racetrack with friends, betting $6 to $10 when the odds seemed in his favor. If he found a decidedly undervalued horse, he would risk more of his hard-earned, paper route money. Unlike many bettors, he won more often than he lost. In later years, Buffett would show the same concentration in picking investments. He would comb through months of Moody's Manual, a basic source of information on public companies, in search of undervalued stocks selling for less than the company's assets were worth. He would travel hundreds of miles to talk with executives or fellow investors who knew about a promising business. Learning from the master. Buffett studied for 2 years at the University of Pennsylvania's Wharton School, but he didn't enjoy it. In 1948, when his father lost his race for a 4th term in Congress, Buffett was ready to return to Omaha, transferring to Nebraska's university in nearby Lincoln. It was there that he found the most influential book in his life, Benjamin Graham's The Intelligent Investor. After graduation, he applied but did not gain admission to the Harvard Business School and instead went to New York to enroll at Columbia University's Graduate School of Business. Graham was teaching a course there. He and one of his disciples, David Dodd, instructed Buffett in the basics of value investing, how to see stocks not as bets but as pieces of a business, how to use the stock market's often irrational ups and downs as an opportunity to buy low and sell high, how to wait patiently to find stocks so undervalued that they provided an ample margin of safety in case their fortunes declined. The concept of a margin of safety proved crucial in Buffett's career. Time after time, companies he invested in stumbled. He almost always lost no money because he had bought them at a significant discount to their intrinsic value. When Graham found an undervalued stock, he would quietly purchase enough of it to win a seat on its board of directors. At Columbia, Buffett discovered that Graham had done just that with an obscure corporation called Geico, the government employees' insurance company, becoming its biggest shareholder and board chairman. Intrigued, Buffett hopped a Saturday morning train to Washington, talked his way through Geico's door, and spent 4 hours learning the insurance business from the company's financial vice president. It turned out that Geico was built on low premiums, low costs, and low-risk customers with excellent driving records. But its true brilliance was its wise investment of the float, the premiums that piled up before customers filed damage claims. Using other people's money to invest for his own benefit struck Buffett as an ideal way to do business, and he put 3/4 of his money into Geico stock. He kept buying more and promoted the stock to his customers for years. Companies that piled up float would become the basis of his empire. With a graduate degree from Columbia in 1951, Buffett wanted nothing more than to be hired by Ben Graham's investment firm. He even offered to work without pay. But both Graham and Buffett's father advised him to start his career elsewhere, so he went back to Omaha as a broker at his father's company. He found plenty of promising investments, so many that he broke his rule against going into debt. He borrowed $500 from a bank to buy into them. Since he wasn't yet 21, his father had to co-sign the loan. And all the time, he was learning the nitty-gritty lessons of dealing with customers, explaining his theories, and being put down for his youth. Doing it his way. Buffett could talk endlessly about business and investing, but he had no skills in small talk, outside interests, or social graces. He dressed in anything that came to hand and a pair of ragged tennis shoes. Any public speaking froze him with stage fright, and he struck out repeatedly when it came to dates with young women. However, by now, he had fallen in love with Susie Thompson, daughter of an Omaha University dean. In desperation, Buffett signed up for a Dale Carnegie course and began to learn basic ways to relate to other people. When Susie showed little interest in him, he courted her father, singing along with his ukulele while Doc Thompson played the mandolin. Eventually, Susie learned to see him as a talented but challenging man who would succeed only with a lot of support from others. Caring for people was her lifelong vocation, and he became her primary case. When Buffett proposed, she accepted, and he won the weekly Dale Carnegie Prize for the student in his class who had overcome the biggest challenge. They married in 1952, and it was one of the best moves he ever made. For years, Susie dedicated herself to Buffett. She adjusted to his long, solitary hours of business study, beginning on their honeymoon. She struggled patiently to upgrade and update his wardrobe. She tolerated that he would eat hardly anything except hamburgers, potatoes, peas, and ice cream. She bore their 3 children and taught them to cherish his sincere but sporadic affection. She made her own social life, collecting scores of needy souls and helping them through life. She put up with Buffett's frugality, living patiently in the stucco house he bought in 1957 for $31,500, the house he still occupies, and wheedling increasing sums from him for her causes and later a vacation home in California. When Buffett bought shares in the Washington Post Company in 1973, he became a business advisor to its famous publisher, Katharine Graham. Susie also put up with what became an apparent love affair, so obvious that, at one charity event, Graham tossed Buffett the keys to her house. Susie even wrote Graham a letter to say she didn't object to their relationship. And soon after that, Susie moved out of the Omaha house and began her own more discreet affair. Susie introduced Warren to her friend Astrid Meggs, who then began to look after him in Susie's stead. When his affair with Graham cooled and Meggs moved in with Warren, Susie remained his close friend and official wife. The arrangement was anything but conventional, but the three made no effort to hide it. Their Christmas cards were signed Warren, Susie, and Astrid. Susie was only the first of Buffett's women to assist him in every part of his life. His assistants were loyal and guarded his time and privacy. He enlisted a respected fortune writer, Carol Loomis, as the decades-long editor of his smart, forthright annual letters to his shareholders. When he took up the competitive bridge as his chief entertainment, he persuaded Sharon Osbourne, a 2-time national championship team winner, to be his mentor and partner. She flew to meet him almost every time he wanted to play in a tournament. And Meggs, who sought no prominence, for years cooked his hamburgers and pork chops while he studied his papers, worked on his computer and played internet bridge games. Only when Susie died in 2006 did Buffett marry Meggs. It isn't easy, of course, to make the world conform to your whims. Even Buffett sometimes had to sit down to Chinese or Japanese food, although he never actually ate it. At Kate Graham's celebrated dinner parties, he eschewed the classic French fare for hamburgers and fries. Late in his life, when his new friend Bill Gates took Buffett on a visit to China, Gates sent people ahead of them to teach Chinese chefs how to cook a hamburger to Buffett's liking. He also managed to get Buffett's copy of the Wall Street Journal delivered every morning. Profits from cigar butts. In 1954, after 3 years as an apprentice stockbroker, Buffett received the invitation he had been waiting for, an offer to work for Ben Graham's firm in New York. "I felt I'd struck the mother lode," he said. He read all the files in Graham's offices. He remembered everything he read, and soon he became Graham's standout employee. His knack for racetrack stooping took a different form, spotting what Graham called cigar butts, spurned, often failing companies whose stock sold for less than the company's assets were worth. Graham's approach was based solely on the numbers. He paid no attention to industry trends, management talent, or any intangibles that could affect a company's value. And for a long while, that suited his new apprentice. Tirelessly poring through dense financial documents at Moody's, Standard & Poor's, and the Securities and Exchange Commission offices, Buffett found some remarkable cigar butts. There was Western Insurance, a company whose stock was selling at just $3 a share even though it had earned $29 a share the previous year, the cheapest stock with the highest margin of safety Buffett had ever seen. In 1956, Ben Graham announced his retirement. Buffett was offered a partnership in the firm. But if he couldn't work for Graham, he wanted to go out on his own back in Omaha. So he started a limited investment partnership, with $105,000 raised from family and friends. At the age of 25, Buffett himself now had assets of more than $174,000. But as the fund's general partner, he put up only $100. The limited partners were promised a return of 6% annually, and they would split 75% of any further profit. Buffett would take the other 25%. He had found his own, thoroughly legal, way of using other people's money for his own profit, but his investors had no complaints. Over the next 13 years, while the Dow Jones Industrial Average rose and, in 5 different years, fell, Buffett's partnership never had a down year and compounded investment dollars at an annual rate of 29.5%.